Evening traders. It's relatively quiet open here in the start of Europe. We haven't really seen too much action, apart from dollar yen breaking down, but that didn't result in too much follow through in the stock market, too much follow through in the euro. And without the euro breaking high, I don't think that everything's going to get too excited here. It would definitely help the whole trade idea if the euro gets above 108.30. But it's okay. I mean, sometimes these things take time. It's not the most aggressive market in the world in the last 6 months, so you shouldn't be surprised when trends sort of stall for a day or two. That being said, I mean, it could provide a better opportunity for you to buy if you haven't yet on the euro dollar or the pound dollar. Pound tested 125, a little bit too much to chew. The main note on here on the euro is that it's chewing through these sell orders above 108, close to these levels that we got to, exact date, so I don't make it up, so close to this sort of resistance zone from the 1st of Feb, and we've got to get past that really to open up the move towards 110. So I'm looking to buy a dip here on the euro, looking to buy a dip on the pound. I think the dollar yen is pretty much in a lot of trouble here. I mean, there's always going to be dip buyers, but it's broken through some pretty long-term support. Downside's just open. 110 is pretty close. 110 is a pretty good level there. That doesn't hurt the whole idea that euro's going up. It's just right now, euro yen, pound yen, Aussie yen are just dominating the flow. If you're looking at the euro yen, I think we're testing 120 at the moment. Where are you? Here we go. Yeah, we just broke 120. Wow. I mean, it might bounce off 120. There's a bit of support there. We'll see how it plays out in the next little bit. If that drags down the euro itself, then we can buy it maybe a little bit better than the current levels. The current levels, nothing wrong with it. It's pulled back 30-40 pips here. It's not too bad. Same with the pound. It's just that you might get another 30-40 pips to the downside without really affecting the trend. Now, the reason I'm looking at this level here on the euro is that it's the previous resistance area from a couple of weeks ago, or last week, sorry, and it's not a bad sort of zone to start looking at buying in the next 10 pips. Really could find support here and turn around, and probably if we have another run up from these sort of levels, it can break through that 108.20, 30 level, and so runs out of steam, pulls back, finds support, has another go. The sellers will be less excited on protecting next time, you would think, especially if dollar yen's drifting lower. But yeah, I mean, it's some pretty interesting price action. Stock markets had a huge fall, down 300 points in the Dow. The market's turning on Trump. His inability to get the healthcare plan across means that all these plans are in doubt. So the big hit comes through all the Trump trade. So what was the Trump trade? The huge rally in commodities was on the back of Trump, and so you saw iron ore rally from 50 up to 90. You saw copper have a huge rally, and you've seen those pull back. Now that's hurting the Aussie significantly. So the Aussie's under a lot of pressure because of the commodity pullback. The banks in America ran up a lot on the fact that interest rates would be increasing quickly with Trump, and there'll be more activity in the economy. Now they're pulling back pretty substantially. So, a lot of those industries and sectors where the market got overbought are now starting to reverse. And if you're talking about how big the rally was from when Trump won back in November, the potential here for pullbacks is quite real. We're talking about 2,500 point rally. So a pullback of 300 points could easily be just day one. And 20,000 is a reasonable target here if the market turns on Trump more substantially. And I doubt that this is a one-day story, so you've got to prepare yourself for that sort of eventuality. And I do believe that the path of least resistance is dollar yen down. As yields drop, yields are everything's falling towards Japanese yields, right, which are much lower. So that difference between Japan and the US is getting smaller, so dollar yen falls. That's just the general gist of what's going on here. That could provide some pretty good. I mean, things get okay with if somehow he gets through his deals and things start to move forward in America, and the market focuses on the second half of the year, then perhaps dollar yen can be really good buying at 110 and 108. It's just, you got to be careful, right? You know, this is potential trend change sort of stuff, and you know, that can lead to sharper moves than you're prepared for. So the market's broken trend, range here on the dollar yen, still very long. People are in the market, so there's a little bit of trouble coming there for them. Euro yen, we've had that sharp reversal as well. A lot of people buying into that Euro yen story, me included. Most of them are getting cleaned out in the stops. Lucky I chucked mine away earlier, because that was a pretty convincing sort of trade idea, that Euro is going to outperform the yen, but not in a safe haven sort of mode. Not too much action in the last hour is all I'm meaning there, Ensa. Nothing, not compared to last night anyway. Aussie yen is the biggest mover, so yen is the strongest and the Aussie is the weakest in the current environment. And you know that the Aussie is weak when the Euro Aussie is rallying. So clients have been ringing me all day saying, hey, you know, we're buying this Aussie on this dip. I'm like, no, this is not the environment where you buy Aussie. How to know if it's Aussie weakness? You look at the main crosses which show you if it's Aussie weakness. They are Aussie yen, sharp fall, sharp fall. We've got a fair bit of room to move to the downside here as well. Aussie Kiwi lets you know that the Aussie itself is getting hit harder than most. So if you look at the Aussie Kiwi, it's pulling back from that 110 test. And Euro Aussie is a really canary in the coal mine. Euro Aussie is rallying sharply, so is Pound Aussie. Big moves in Pound Aussie as the fallout from that CPI number comes, still remains a support. So there's things here that are moving a lot, and Aussie is definitely not a buy at the moment until some of these things change. Yeah, and actually very dangerous sort of price action here on the Aussie. When it gets moving, it can move very quickly to the downside, and it's starting to get slippery like that in the last 24 hours. So in terms of the pound and the euro, I'm looking closely here to buy soon, and I suspect that's where the value is today. Sort of the easier trades are without too much volatility. Pound probably got to be a bit more patient, but the euro here, just searching. Not happy really. It's stalled at 108, but 108.20 so many times, but it's part of the game. So month-end flows, quarter-end flows. Yeah, I mean, look, yeah, that stuff is really in the background compared to what's going on with the stock market. Yeah, it's might be affecting it by 20 pips, 30 pips, but we're talking 100 pips moves here. And if stocks fall another 200 points today, you'd expect dollar yen to be testing 110 tonight, or during Asian session tomorrow. So put on your helmets, guys. There's going to be some interesting trading environments. I'm going to buy a little bit of euro here, actually, with 30 point stop, 40 point stop. So we're looking for that to resume topside. Won't get into too much trouble if somehow it reverses. Fed speakers aren't really rocking the boat too much. There's a lot of them coming out. Now we've got the big ones later in the week. We do have Yellen. Exact time is at tomorrow, just before midnight my time, just after unemployment claims. Get ready for that just after unemployment claims. Thursday morning is the RBNZ. Now the GDT came out yesterday, the global dairy auction, and it was pretty solid. Right, and if you're looking at the price action here, we had a little brief rally higher on the back of it, but what we had, the risk aversion was just too much, and at the moment the Kiwi is too dangerous to be buying because of that risk off trade. But once that settles down, then the Kiwi is going to be a nice little risk reward situation, I believe. The market's let's see how negative the RBNZ is. What we want to see tomorrow is that the RBNZ come out with the same dovish rhetoric, and then how far the market moves on that, right? If the market doesn't move much, then you know it's ignoring it. And since they're remaining on hold for the next 2 years, you can sort of look to the next RBNZ as nothing, right? As they won't be able to jawbone too much more than they're already doing. And so it gives you that little bit of confidence that the potential Kiwi recovery can continue. But let's not count our chickens before they're hatched. In the market where the stocks are crashing or falling sharply, then Kiwi and Aussie are going to be dragged down. So there's that part we have to get past first before you consider buying Aussie or consider buying the Kiwi dollar. But just generally, you know, anytime a central bank's jawboning, you want to see if the market grows tired of it. And that's another sort of clue that you can start to ignore them. So some traders want to know, like, well, how do we know that stocks started falling too much, right? And how do we know that the effect of it is going to turn Aussie from buying with US dollar weakness like it was for a lot of last week to selling on risk aversion? So I wanted to just go into that a little bit more. 22, so the stock market open here, you can see the US dollar is just under pressure generally. This is post FOMC selling of the US dollar. And then when the stock market starts to fall, you see the Aussie pull back a little bit, you know, another 30 points on the first 100. Okay, but when the stocks fall another 100 and then fall the extra to 300 points down on the day, the Aussie gets that relentless grind lower. Okay, and it's at this point, if you're looking at, say, the dollar yen, look at the same time period. That the dollar yen starts to sell, that you see the Aussie really start to get dragged down, right? So the Aussie's trying to hold its own just because of US dollar weakness from the dollar yen selling, but at a certain point it gets too much, and then you see the Aussie yen selling. I don't have an Aussie yen chart, sorry. It would be great if I did on that same time scale. The Aussie yen selling really gets going. That's when the Aussie's doomed. Okay, this takes a little bit of experience and checking each of the crosses. When you're trading Aussie, you should be checking crosses, but at a certain point the market just folds, yeah, and then you have to give up on your buy the dip on the Aussie routine, which had been so good for so long. So, you know, probably just that point broke 77, came back up, broke again. Okay, just give in, right? Get out. It's game over here for the Aussie, and you have to be fearful of how far we can fall in that sort of environment. Not so much the same here on the Kiwi. On the euro, plays its own song. Yeah, I mean, selling is not the worst trade in the world. BNB, right? You've got a nice level, but I'm sure you got to take profits pretty close, right? I don't think you're going to be targeting 106, 105. It's not that sort of market where you can see that sort of reversal very easily, unless you're trading a completely technical system here and expect range trading to continue, which you can, but it's, to me, I like to look for that bigger move topside. And so yeah, let's just see if we can get some stabilization, a couple of green candles, then you can buy on the pound. Stabilization, couple of green candles, then you can buy on the euro if you're looking for confirmation with your trades first. Alright guys, let's have a look at some of the research out there today. Deutsche Bank's got a little report out on the Aussie dollar. So RBA minutes did come out yesterday. Talked a little bit about a housing bubble here. It's actually been a topic of great interest, and Nick knows a fair bit about real estate actually. In a former life, I do believe he was involved in this game, and so it's you know, it's a topic in Sydney anyway. That's it's what we talk about a lot, just between friends and work colleagues. You know, how much are we going to go up? Houses in Sydney have doubled since 2009, which is significant in a first world country, right? They're already expensive in 2009. Very hard to find anything in Sydney under $1 million in the greater central area. Alright, they're calling a peak in 110. So we're looking at the iron ore. The rally that iron ore had at the end of 2016, the potential pullback to what they call fundamentals, $50 a year would really damage the Aussie, because it's been significantly higher in the last couple of months anyway. If anything, the Chinese have been tightening lately. And they reckon that milk prices are bottoming here. So the Aussie Kiwi trade really could potentially see a bit of a surprise. I think there's still going to be buyers back towards 107.50, and then buyers at 105.80 on the Aussie Kiwi. Bring up Aussie Kiwi here, but you've known in the past how much that trade's disappointed. So, you know, I don't know if I'll be buying at 107.50. It depends how aggressive the market is on the downside in the Aussie. But you can, you know, I wouldn't be buying this dip here on the Aussie Kiwi, that's for sure. The one right now. Yeah, Australia's had 26 years without a recession. So we really don't know how bad it can get, yeah. We're talking about the equity chart. You know, we remember when we were talking about on Monday, we were talking about this double little top after the peak, and I was like, oh, geez, it could really roll over here. The dominoes could start to fall with this US dollar weakness, country after country after country. I didn't expect this though, guys. This was much more aggressive than I thought would be the kicker. Really interested to see if this is a second day of selling. I think that would be a big key clue here that this has got a lot of room to move if it doesn't bounce back up. Alright, so they're talking about the deterioration of risk sentiment last night. First, the growing concerns of Republican plan to repeal and place Obamacare may foul a crucial floor vote in the House on Thursday, which will further delay Trump's tax plans. So investors are beginning to become increasingly skeptical of the Trump-inspired inflation trade. So, you know, I call it the Trump trade fade, and that will continue to be a major theme, I think, for at least a couple of weeks and maybe months. If stocks fall aggressively, there's no way the Fed's raising rates either. So keep that in the back of your mind. Second, geopolitical tensions increase. North Korea announced acceleration of its nuclear missile program. Yeah, we saw that today too. That didn't help dollar yen. and some stresses are starting to be seen in the Chinese market. Aussie dollar bought a brunt, CAD was sold, Kiwi was okay because of the dairy price, but still was kind of alright. Alright, so these guys think that the vote, you know, will pass on Thursday. So all of a sudden we're going to be watching this vote, yeah? If everyone's watching this as the first key test of Obama's ability to rustle up the Republicans, sorry, Trump's ability to rustle up the Republicans, that's, you know, we'll see how that plays out. Safe haven currencies like Euro and Yen will emerge as biggest winners should it not pass. Yellen is also speaking on Thursday, guys, so we do have ourselves a bit of a doozy coming up then. Yeah, I think so. 5% at least. Maybe more. Maybe more. I mean, what's going to make the risk sentiment improve in that scenario? I mean, it's like, well, all his agenda is going to be in jeopardy. We did get a little bit of news out regarding Scotland last night. PMA will reject a demand for a new referendum. So far that hasn't been making the waves though. Other issues have been in the fall. And just to recap that those CPI numbers last night, just so we can see why we're buying into this. Barclays. So CPI's jumped to the highest level since 2013 in the UK. Strength of the core inflation surprise. Seems like a lot of it is services. Cars are getting more expensive. Just, you know, what you have is your currency depreciated by 20%, right? All the imports are much more expensive. Just takes a little bit of time for that to flow on. Alright, a little bit light here in the research department tonight. What I will do is have a little look at some of the trades. We haven't done this for a while. Some of the trades in the trade ideas section. Selling of oil is nothing bad. That's just generally going to be crunched. The oil was already struggling to get back above 50 a few times, so the rollover here makes sense. Test back towards 47 at least, where they're targeting. Oh, a new low. I mean, the TP here is a bit weird, right? You think the market's going to make a new low and then not follow through. You can be a bit more gracious, a bit more open with your TP there, perhaps down to 46. Morphs has posted a fair few trades. Pound Aussie would be a beautiful trade 9 hours ago. yeah, look, a lot of traders are looking at this and thinking that perhaps this is the big one, right? We talked about the 5,000 points potential rally here to get back to normal prices in the next 6 months. If stocks fall and China has issues, then yeah, this is going to be a beautiful trade. Let's bring it up. How much has it moved already? Wish I bought pound Aussie randomly rather than pound Kiwi last night. It's already up in the last 3 days, around 300 points. Next resistance is, at least 600-700 points away. This could easily get tested on any sort of pound recovery next Monday when May gave his Article 50 speech. Definitely worth keeping an eye on. Big candles are worth following in the market. Generally, they lead to more green candles or more red candles if it's selling. You rarely see big candles reverse sharply, that's for sure. Yeah, no, it's going to be an interesting day. The thing you have to be watching today, guys, is the stock market. If it stabilizes, then it's not going to be easy to be buying the euro or to be selling the dollar yen. You might see bounces and frustrate you. So you have to be a bit more patient on any sort of bounce in the US stocks. That's going to slow down and push down the euro and let the dollar yen have a bounce. If you see straight up selling, that's a good sign. That's a good sign that the market's going to continue. And then if we can get above 103, 108.30, and we're sitting here tomorrow at 108.40 or 50, then we can continue to buy on the dip. There's no reason to slow down in that environment. In terms of the main data points coming up, there's a couple of things out of the US. Crude oil inventories are always important for oil traders. Next thing really is RBNZ though, and we just want to see how much the market moves. Tomorrow we'll be doing the live UK retail sales. A very volatile number, so it doesn't have that big an effect. If you're looking at the volatility of it, you can see it's all over the shop. Missing, beating, missing, beating, missing, beating. So in my experience, it does have very limited effect because of that volatility. So let's not get too excited about the implications of it. But it's still good to keep in the back of your mind that there is going to be a bit more volatility from there. I mean, look, you might get a better level to sell again, BNB, right? The market doesn't have to be that crazy. If you like selling the euro, you probably get another chance. I don't think this is the last hurrah. But okay, guys, look, I'll be back tomorrow at 9 GMT. We'll review how the US stocks go. We'll review how dollar yen, if it can get back above 111.50, whether the euro can break 108.30. Probably one of those two things will happen. Only one of those two things will happen, and then we can start to make a couple of plans from that. I don't mind buying the euro here, like I've said at the start. I don't mind buying the pound here. Just got to be a little careful that we are buying too high, but they look pretty solid buy on the dip sort of trades.